Good afternoon and welcome to the One Finance Masterclass. My name is Sonam Khadri. I'm an AVP Marketing and Communications at One Finance. These masterclass are designed in such a way that you can benefit from this specialized program led by our qualified financial advisors so that you can empower and take financial decisions, informed financial decisions. Today, we again are taking back to a superb, interesting masterclass that will help you realign your personal finances. Because these sessions are led by qualified financial advisors, today again joining us on another masterclass is Mr. Rishit Shah. He's a QPFP, he's a co founder at Mega Gain, 7 years of experience as a personal finance coach and also as an insurance space consultant. So, thank you so much, and let's welcome him over here at One Finance Masterclass. Rishit, thank you so much for joining us.
Thank you so much,
Thank you
Sonam.
for doing this for us, actually, first of all. Today's masterclass obviously realign your personal finances for the new financial year. So, obviously, in India, we start from April to March. Our finances need to be aligned accordingly. But obviously, there's no right time, or is there a right time to realign your personal finances? Before I get that answer from you, I'll
Sure.
just put it on the poll. Request the team to please put a poll for our audience, our viewers, that what motivates you to realign your finances at the start of a financial year. It can be a fresh start, it can be tax benefits, it must be new financial milestones. Maybe you're setting for the year, and maybe there's a change in income. Absolutely, salaries are increasing. It's April
Absolutely.
month.
Absolutely.
Please, we have to take note of these personal finances that really changes over the years. Be it because of your salary change, maybe we have heard a lot of layoffs also. So maybe a loss of job or something like that, or maybe just want to see to it that you are in the track for your financial milestones that you have set for yourself. So let's just answer the poll. You will able to answer this easily through your LinkedIn, Twitter, and website. Note, we are live right now. This masterclass is live on Instagram, on the One Finance website, LinkedIn, and Twitter. So you can answer it anyway. We'll able to see your answers in a bit. I'll just check with my team if people are answering, and we can just take the answer from here. So Rishit, usually what are the right way first to realign your finances, and what actually should be a reason to keep realigning it, or maybe you should not move it too much? How should individual go for it?
As a business person or as an employee, what we do is we, at the end of the year, we close the biggest business accounts, right?
Yes.
Why we close it? Because we come to know where we are standing right now. At the same time, we also plan it for the future so that we get a direction that what needs to be done. Same goes for, so the concept remains the same. Same goes for personal finance also. You need to sit at the start of the year, you to understand it, where you are standing, what are the goals that you have, and based upon that, you have to create a portfolio so that things are easy, and in case of any disruption, you have a backup to handle.
Absolutely, absolutely. Okay, let's just check the answers that we have received. Okay, what motivates you to realign your finances if, at the start of the financial year? 30% people think it's because it's a fresh start, so they want to realign it. 50% think that for the tax benefits, yes, your income has increased, or maybe some changes has happened, and maybe taxation is a big part that you want to align. 20% say it's because of financial milestones. Yes, absolutely. If your salary is increasing, if you're started doing something new, and your milestones need to be adjusted accordingly, so you need to realign your finances. Today's session is purely about you realigning your personal finances for your financial year. Rishit, floor is yours.
Thank
Please
you so
enjoy
much.
and take us through some really good case studies as well,
Absolutely.
so that our viewers can understand better.
Absolutely.
Thank you so much. Continue, please.
So thank you so much, Sonam, and the entire One Finance team for having me on this masterclass. So before going further, first and the foremost thing that I feel that we always say that personal finance is very personal, it's very customizable. But what if I say that it is customizable, it is very personal, but there's certain things which remains the same. The process remains the same, right? So what we are going to speak today is about the process. If you understand that process as well, then I think you should be in a better position to handle your personal finances better. Okay. Now, if I go further, what is the one thing that we always say if I want to start a business, or say if I want to start a investment? What is the one thing that we always think about it? We always think about is the risk, right? That I might incur a loss, or probably my principal will wipe off, or we always think about the risk, right? So same goes on personal finance also. What you need to understand is you need to understand what is the risk that you are taking, how we are going to cover that risk. Once you have covered that risk, then you can go for growth. Unless and until you have not covered your risk, you cannot go for growth. For example, even if you have made 30, 40, 50 lakhs on an investment, in case of anything big thing comes in, you are going back to the square one, right? And we are here, we are not here, we are slogging ourselves, we are working so hard, we are not here to make our journey difficult. If we plan it properly, things will be much more simpler. Okay, so going further, when I say about your personal finance, okay, so what is one thing, if I say about the fear, right? Fear is something that is always there. So what is the one or two fear that comes into your mind? So if I say early death, if I say probably an hospitalization which can take too long, probably my money will be completely wiped off, my goals are not achieving, and living too long, right? These are the fears that we have. Now again, remember one thing, this is something which I believe it, that you need to take risk in your life, then only you can grow. But the risk has to be calculated risk. You can't go blindly about it. If you take a calculated risk, it will be much more better. For an example, I stay in Bombay. Okay, if I want to travel from say Borivali to Churchgate, okay, now say there are 3 4 options for me. Either I could have taken a train, I could go by a bicycle, I could go by a car, or I could go by a bus. I would rather prefer to go by a car, because that I feel is much more safer. So what I'm doing, I'm taking risk because I don't know what is going to happen to me the next moment. So I'm taking risk, but it is a calculated risk. So in personal finance, you need to take some risk, but if you take calculated risk, you should be able to go in a much faster way. So again, so that's what we're going to speak about today. The focus area is going to, we are going to speak about insurance plan, building emergency we are going to speak about emergency fund, strategies that can help you on the investment side, and then we are going to speak about the tax management. Now, as far as risk are concerned, there are two kind of risks which I can foresee. One is a risk which can be transferred, and one is a risk which cannot be transferred, which has to be which you need to build up. Now, again, the risk which can be transferred has to be transferred. Outsource it. Okay. Now, when I say about the transfer of risk, so transfer of risk will happen on the insurance side. Can you just change the slide, please? Thank you. Yeah. So transfer risk is something you pay a certain amount of premium and your risk is transferred with that premium. Okay. So for me, there are only two kind of insurances which you need to take it. Okay. One is a term life policy and one another is a health insurance policy. So when I say about term life policy, what does that mean? It simply says that a person, an insured, who is paying certain amount, a small amount of premium to insure himself with a big sum assured, so that his family or her family is secure in case if anything happens to him. Okay, for that certain period of time. So if anything happens to that person during that period of policy, the entire sum assured goes to the nominee, and if he stays, his family is happy, he's happy, and things will be much more smoother. So we are covering a risk over here. Now, many a times I've been seeing people telling me, yeah, that I have my father, I have my friend who will take care of my family and all that stuff. Now I'll ask you, so you can put it down in the comment box. I just need 3 people of yours, okay, who can help your family in case you are not there. Remember one thing, if I'm a middle class person, an approximate corpus that I'll need, I'm not saying exact corpus, approximate corpus that I'll need is 5 to 6 crores rupees, okay, throughout my career. Now, if anybody can put down your 3 names, or three, as it can be for father, mother, friend, relative, can put down on the comment section 3 names, you know, who can help you if you are not there, or you can put it down on a pen and paper. Uh, can I get okay? Just 3 names. I'm not asking for more. Just 3 names. Okay. So the answers that we are getting is mother. We have got his mother. We have got his father. We have got sister. We also got friends. Everybody, as in we think about it, everybody gets come into this scenario. Now, okay. Now, if I say mother, father, perfect. Now, if say usually you take a term life insurance policy when you start off your income. When you start off your income, usually anticipation is you will be around 25 to 30 years of age. So probability is that your mother and father will be at the fag end of their career, fag end of their life. Now, now you only think about yourself, right? How much mother father can help, or how many years, probably 10 years, 15 years, but what after that? If I say about my sister, if I say about my cousin, arranging 5 crore rupees in the lifetime, is it going to be possible? वो मेरा दिखेगा, मैं उसका दिखूं, right? We have seen a number of cases whereby there has been huge fights on the money side. There are many live instances. I don't need to answer on that front. If you speak about friends, 5 crores, can you ask your friend? 5 crores, can you go again and again to your friend, again and again to your family, that yeah, please, yeah, give me this much of money? Just put yourself into your spouse, or into your family member's shoes. You'll come to know how much it is to take a term life insurance policy. Remember one thing: life is very uncertain. Tomorrow, what will happen to me next moment, I don't know. Nobody knows about it, right? What is in your hand is to secure your family. Life and everything is not in your hands. So secure yourself. So it's your responsibility to secure your family. Okay. Now, how much should be taken? That is my assumption. Okay. It can change depending on the scenarios. So basically, all your future expenses, or all your future goals, or your family goals, if there is loan, include EMI or loan also into it. Calculate with the inflation. The sum assured which you get it is your sum assured. So if you think that 1 crore will be enough for you, will enough for me, I don't think so. You need to calculate it. Sit with an advisor, or there are many calculators which are done on the public forum. You can utilize it. Okay. Now the biggest mistake that people do, what is that? Everybody has a return back policy, a traditional policy. I'm not against it, but I'll just tell you the reason for that. Okay. Now, say when I speak about traditional policy, what is the normal mentality that we go with, right? That I'm just giving an example here. So what the typical scenario is that you pay approximately 10,000 rupees of premium for say another 15, 20 year, 15, 18 years. After that, after the premium stops, and you start getting say around 18, 20,000 or 22,000 rupees after of the insurance company for another 15, 20 years. And after that, you get an entire lump sum, a bit of a lump sum that you get it. Plus, we also get is an insurance, right? 10 lakh rupees. Now, we being a human, we always like to get more than what we pay, right? That's what the mentality is. And here you are getting as insurance and investment both together. Now, as in hands at your heart, think about it. Say, when I speak about insurance, if anything happens to you, if you get say 5 to 10 lakh rupees, will your family sustain 5 to 10 lakh rupees? The answer is definitely no. If I say about investment, you're paying say 10,000 rupees, and you will after say 15 years get 15,000 rupees. Do you feel 10,000 rupees as a value today? Probably yes. But do you feel 15,000 will have a value after say 15, 20 years? The answer is for sure no. So what you are doing, I'm a Gujarati. I always, Gujarati wo khichdi bahut pasand hai. So what you are doing is you are doing a khichdi. You are mixing insurance and investment both together, right? So be true to the label. Insurance and investments are different. It's insurance, insure. It's not investment. So make sure that you don't, if you want to take it, but have a term life insurance. For example, say a person who is of 30 years of age, if he takes a 1 crore sum assured, say for 70 years, till his 70 years, then the premium that he pays should be approximately around 10 to 12,000 rupees a year, not more than that. If he's fine and everything, the health is good. So a trade-off between a 10,000 to 1 crore, I think looks good, right? As in, at least you are mentally secure that if anything happens to me, my family is secure, right? And even your goals and your family goals are secure to that fact. So this is a very, very important concept, a very, very important policy to be taken. Second important policy is an health insurance policy. Now, remember one thing: we have read in the newspaper, we have been hearing this news that medical inflation is rising by 14% every year. So when I just go on the number side, 14% means on the theoretical side, if a surgery cost is 3 lakh rupee, if there's a 14% compounding to it, or inflation is 14%, probably the 3 lakh rupee will go to 6 lakhs rupee in another 4 to 5 years, and to 12 lakh rupees in another 4 to 5 years. So just think about what kind of money will be required in case of any hospitalization. Now, how much should be ideally? There again, it is a very scenario basic, but ideally speaking, it should be more 30 to 50 lakh rupees per family. If you ask me, it should be more than 1 crore, but per family, 30 to 50 lakhs at least should be there. Now, what people do mistakes over here? Say I've seen n number of people buying a policy, say of 5 lakhs or 10 lakh rupees, thinking हो जाएगा मेरा. I can say चलो 10 lakh का शायद आज हो जाएगा. But the problem with these policies are there are cappings in the room rent cappings in the policy. When I say room rent capping, say 1% and 2%. When I have a 5 lakh policy, what insurance policy says that, in case you get admitted to the hospital, you get maximum is 5,000 rupees per day, which is 1% of your sum assured, right? Now, we being a middle class person, we always like to have a single, at least a single private room, not if not the luxury, if not, right? So when I speak about a single private room, at least in metro cities right now, it doesn't come nothing less than, 8 to 10,000 rupees at least. Now, what your policy says? It says that you have a capping of 5,000 rupees. You went for a 10,000 rupees room. Technically, almost 100% you went above it, right? Now, for example, if you claim of say 3 lakh rupees, you might be thinking that I'll get is around 2.6, 2.7 lakh rupees. But no, you'll get is around 1.5 to 1.7 lakh rupees, because the condition says that, all the proportionate deductions are related to your room rent. So when I say that a person who is admitted in a general ward and a person who is admitted in a VIP ward, both of them will have the same line of treatment. Only thing is, as soon as I go, I improvise myself, or I go on a high standard room. What will happen? I'll go to a dual category room. I'll go for a single private room. Then I'll get a sofa. Then I'll get a nurse with me and all that stuff. The luxuries increases. So all the proportionate deductions, all the proportional expenses of the hospital, excluding medical bills, will increase. Now, as we spoke, you went for say 10,000 rupees room, you were eligible for 5,000 straight away. 50%, 40 to 50% will get deducted. वो तो हो गया, चलो छोड़ दो. When I think from next 10 to 15 years time, this room rate will go to around 15 to 20 years, 15 to 20,000. The insurance policy will remain a paper policy. It won't be of any use. So make sure if you have any cappings to it, don't put any cappings to it. Keep it single private room rent, or keep it a no room rent capping for a longer point of view. Thinking from a longer point of view. Second important mistakes that we do is, say if you have a policy and if a baby is born, then add your baby in 90 after 90 days time, or add it during the renewal. Many people have seen they forget adding their baby, so add your baby also into the policy. And the third is the biggest mistake that every many of us do it is, if a person is employed, say he usually banks on a corporate policy, that I have 5 lakh corporate policy, 3 lakh corporate policy. Now understand one thing: corporate policy is a bonus policy. It should be treated as a bonus. Okay, it should not be treated as a primary policy. Reason: in case if you leave the corporate, you are out of the policy. Second, say if you are with the corporate till retirement, except few corporate, there almost none of the corporates will give you a retirement policy. Now, at the time of retirement, we have seen, a number of cases, and you tend to get certain amount of pre-existing like diabetes or cholesterol or anything like that. Now, at that point of time, you are at the mercy of insurance company to accept your proposal. Okay, you so again, if say you have a cancer or something, getting again a cancer policy or covering the cancer is going to be difficult. You are at the mercy of insurance company there. So make sure that you take it as early as possible. Take it big, because the way inflation is rising, it is important we take it big. And I think because these are the two policies which will help your goals, which will help your fund to not be erased. So your goals will be intact throughout your tenure, and you should be able to achieve your goals. Otherwise, what will happen? As I said, 50, 60 lakhs, you made it. One big claim, entire things are wiped off. You're again back to zero. So all our goals are either dragged, or you need to forget few of your goals. And we are not here for that, right? So yeah, so the next policy which is important is critical illness policy. Okay. Now, when I say, again, this is a good to have policy, must to have policy. We already spoke about this is a good to have policy. When I say critical illness policy, now if you have seen this, as in, if you have noticed this, that there has been since last 10 to 15 years, there has been many cancer cases coming in. In fact, in last 3 4 years, I've been hearing many people who are at say 40 to 50 years of age are getting heart attack and they are dying, right? So there are many critical illness coming in rapidly. The reason behind is probably pollution, stress, junk food, late sittings, or late night parties. As in, we as a human being, we always doing things which are harming our body, right? So there's a high probability that you might get a critical illness. Now you will say that I already have an insurance policy. Yes, in case you get admitted, okay, if there's a critical illness, for example cancer, it takes the treatment cost is huge. Touch wood, you should be able to cover, as in if your sum insurers are good, you should be getting covered under your policy. But when you are getting treated for this kind of critical illness, what happens is there is huge, I'll say, huge toll on your body, and the efficiency of you working reduces down drastically because of the weakness. So this critical, in case if you have a critical illness, you get detected. There are certain policies which gives you from day one. There are certain policies which has a waiting period to it. Okay, so if you cross a waiting period, you get the entire lump sum sum assured to your in your bank account. So how it has, so obviously your medical will be there, but this will help you on the finances side. Will help you a bit on the on your own personal finances to take care of it, because during that time it will be a quite a low phase or difficult phase of your for your family. Okay, so this is a very important policies, I feel, at least at this junction. I don't know about the future. At this junction it should be taken. Then is again an accidental policy, again a good to have policy. The reason behind, the what is a shock that you can get to your family. Look, if there's a prolonged illness, I'll say family is psychologically prepared. You are psychologically prepared, and your finances should be a bit of prepared if there's a prolonged illness and death happens. But say if there's a sudden death, that's a big shock for any other family. There's big panic situation that can come in. Now already you have taken a term life policy, that is perfect. But if I say a person who has started earning, okay, say from 25 years of age to say 40 years, 45 years of age, I feel at this point of time a normal death is a bit difficult. But yeah, an accidental death is a huge chance. There's a huge probability. So person who is regularly on the field, a person who's regularly traveling, I guess personal accident policy has to be taken, so that you get the double the sum. So you get a sum assured, which is a term insurance policy, a sum assured plus this policy. So your in case of any eventuality, your family is quite enough safe as well as the finances are concerned. Again, there are options here whereby there are add-on covers which like you get a weekly compensation also. There are TT, DDA, and also that comes with a bit of premium, so you can choose what kind of things you want to do. But yeah, again, if you ever if you take a term life policy, you can also inbuild critical illness and a personal accident cover into your term life policy with additional premium. You can even take it a separate policy. It depends on you or your advisor how they want to advise you. Okay, so yeah, so till now what we have spoken about is a risk which can be transferred, right? So these are the things which has to be taken, which has to be considered. Now we'll be speaking about is the risk which cannot be transferred. It has to build up. It has to be you need to take care of these things. One is, as we can see, it's building an emergency fund. Now I feel that this aspect of personal finance is is a very neglected sector. Now, just to, if I tell you, you can ask, say, five of your friends. Out of five of your friends, only one would be having emergency corpus. Rest four won't be having emergency corpus with them. What we think, yeah, let's let. So the problem that we create over here is, the mistakes that we do is, "Arey yaar, let me invest into equity. I get more return in case if anything happens. I'll sell my shares and get it done." Now, understand one thing: if during the COVID times there were many emergency cases which came in, markets were down. What has happened? Markets were down. You removed your emergency fund at the negative price. The purpose of emergency fund is not to gain money out of it. The purpose of emergency fund is to get the money immediately. Whatever returns you get is a bonus. So focus on how fast you can get, how secure it is. So where you can invest in, you can invest is into any liquid mutual fund, a safe FD, a big bank FD, or a cash in hand is also okay. So keep it safe. Make sure that it should be safe, and you should get in a maximum in a days or 2 days time. Okay, now again, how much should be the emergency corpus? Now again, here people make mistake. Ideally speaking, why emergency corpus required first? So let's speak about that. So when I speak about emergency corpus, what are the emergency that I can see? Emergency medical bills that can come in, home repairs that can come in, or I can also say loss of job, right? Now, if these things happen, what happens is obviously your finances become a bit up and down. So if you don't have an emergency corpus, but if you're an emergency corpus, it will help you, because in case if there's a job of loss of job, sorry, or a business downturn to that fact, your normal expenses are still going to go, right? Whatever राशन पानी कपड़ा जो हम लोग लेते हो तो होने ही वाला है, plus your EMIs are going to go. Now remember, even if you miss one EMI, your bank will teach you whose property it is. So you need to pay that EMIs also. Now, so ideally speaking, all your future, like all your monthly expenses plus your EMI, so calculate, multiply that into 6 to 7 months or 6 to 12 months, depending on your scenarios. This should be there, and don't put it into equities because, as I said, and there can be huge problems in the if the equity market goes down. Okay. Now again, why we are doing, as you can see, that we it obviously we I already spoke about it. It ensures that there are no surprises on your financial. It prevents you from debt accumulation, safeguard the saving, and that's what we spoke about. Buffer against a shock, and maintain financial stability. So yeah, this is a very important concept which has to be taken care of in the future. If you are not having it, start building it out for around 6 to 12 months time. Okay, 6 to 12 months of your monthly expenses plus your EMI. Okay. Now again, there's a poll. There is something which is very unique. Have you heard about gift planning? If anybody can just put down their poll onto it. Yeah, so as we can see, that 87% of the people doesn't know what is gift planning. So I'm not speaking about the gift deeds and all. It's this is something different. So what is gift? So this is something which I'm explaining from my own example, okay, and I've been doing for my clients also since last 3 to 4 years, but it has been quite beneficial. Now, think from an Indian point of view, okay. Now I am being Indian. What happens is during any occasion, marriage, birthday parties, a small kid coming to your place, or even to that vacations. We like to have vacations every year, like right, a small vacation, something. What happens is during all these birthday parties and all this, all these marriages, you need to give a gift or something. You need to shell out your money. Now it happens with me all the time. I don't know about the other people. It happens with me all the time that that all the expenses come together in a single month, like December. NRI comes to my place. Again, there are many marriages which happen. So what happens is, if I'm not built up a gift fund altogether, a different gift fund, my finances will get impacted. For example, my monthly expenses are say 30,000, and my investment is 30,000, and 10,000 kept as buffer, say after 70,000. And say if everything comes together in a single month, which usually happens if you have noticed it, then my finances will get impacted, because this gift I need to give it, say that will cost me 20, 30,000 rupees. So what happens is you are then utilizing from your emergency fund, which is not right. So create a gift fund, a simple gift fund for your, which can be invested into liquid fund or breakable FD. Invest regularly. Okay. So what you can do, everybody will have an idea what are the occasions that are going to come in this in the current financial year. Think about it. If you go for a small vacation or 2 3 days vacation, you know what is the cost that is going to come in. And vacation is something you are going to go, you are not going to neglect it, right? So calculate that thing. For example, it goes to say 2 lakh rupees. 2 lakh rupees a year, divided by say 12. Start an SIP into a liquid fund. Your finances will be much more better. If anybody can put on the on the comment box whether you agree or not. I think, is it with me only, or is it with you that many a times it happens that many all the time it happens that that all the expenses come together, all the gifts expenses come together. Right, so I guess if you create a different fund, so this, if I tell me, when I'm saying this, yeah, your finances initially we get impacted because we are adding something new to your finance, okay, to your planning. So this will take, there will be certain teething issues till 6 months or 12 months, but once the cycle is over, then it will be much more simpler, much more easy, and trust me, you will really like this. Try it out once. Yeah, next. So again, so we spoke about till now was all the risk aspect, भाई कितना risk है, ये लो वो लो सब कुछ बात तो हो गया. Now we'll be speaking about is about the investments. Now, important thing about the investment is, as we spoke about risk factor we have covered. Now we can go for growth. But when I speak about growth, one thing which is silent killer, which is inflation. Now now this is something, a simple example. Inflation is nothing but you're reducing your purchasing power. आप पहले आप जो 10 रुपए में एक चॉकलेट ले सकते थे, आज वही 10 रुपए में शायद अगर पीपल लोग as in a small chocolate will be able to buy it, right? So that's what inflation is about. It's a silent killer. Now giving you a simple example, if you can think about it, say say whether you are in any of the town, doesn't matter. Say before the COVID, I'm staying in Bombay since I stay in Bombay, but you can analyze from your own experiences also. Before COVID, if I was in Bombay, if I go to a normal ordinary restaurant to have dinner, a per person dinner cost was approximately around 200 rupees. Okay, 200 to 250 rupees, or say 150 to 250 rupees. I'll say the range. Now after COVID, in 2 or 3 years time, this is same hotel and everything, the per person has raised to around 300 to 400 rupees or 450 rupees. What has happened? Usually it happens यार, सैलरी उतना होता नहीं, इतना तो बढ़ता नहीं, इन्फ्लेशन बढ़ जाता है, पैसा खत्म हो गया है, पता ही नहीं चलता है. Right? So that's what I say. Inflation is a silent killer. You will never know when your money is getting exhausted. So again, there'll be two type of inflations. One is a retail inflation, one is a wholesale inflation. Now, when we speak about, you'll be hearing lot of financial advisors. Yeah, retail wholesale inflation is 6%, 7%, but that is what government has said. When it comes to you, it goes to 8 to 12% easily because of the lifestyle inflation. Now, this is something which is coming big time. What is lifestyle inflation? If you again, if you analyze this thing, this has happened with me. If you analyze, I think we will be on the same page. So when I speak of lifestyle inflation, say when I was small, on my birthdays, my friend used to come to my place. My mom, obviously cake was there, and when we were eating the snacks was usually a samosa, some wafers, and pav bhaji, right? Now, tell me one thing: how many of your connects kids are celebrating birthday at home? I think probably after 10 will be one or two. Even I'm not too sure about that. Now everybody wants to give a birthday party, celebrate birthday party, either in a McDonald's or Pizza Hut nowadays. And there's a new trend which is coming up, which is going booking a turf, cricket turf, and playing on that. That's a new trend which is coming up. Second important aspect, मैं जब छोटा था, from going to Mumbai to Pune was a big thing on a vacation. अभी पुणे तो मैं ऐसे ही सुबह जाके रात को आ जाऊँ वापस. Now everybody wants is to go to Maldives or go for a vacation to say Europe, right? Lifestyle inflation. Now this is something which is coming big time because I don't know how it is coming, but maybe because of social media, lot of presence. We have seen lot of people, social pressure, but this is going to stay with you. So if you don't understand this, if you are not in control of this, trust me, things are going to be bad or worse for your future goals. So this has to be taken care of. Next. So again, the very important concept in personal finance, I guess, मुझे if you ask me, स्कूल में मुझे शायद पावर ऑफ कंपाउंडिंग में एक दो क्वेश्चन पूछा था बस. आई डोंट थिंक उससे ऊपर कुछ पूछते. वी ऑलवेज स्पीक आउट सिंपल इंटरेस्ट, सिंपल इंटरेस्ट, सिंपल इंटरेस्ट. But this is what is needed in your business. This is what is going to be helpful in your personal finances. And trust me, power of compounding is something we ourselves doesn't know. We ourselves underestimated. Whether it's a financial advisor, whether it's a person, whether it's an investor, everybody is underestimating this thing. And I'll tell you reason for that. Okay. Now, what we have done, there is, you can see, I've given you, for example, 1 rupee, and you compound. Compound is interest is nothing but interest on interest, right? And you compound it every day. Okay. So day one it's going to be 1 rupee. Day 10 it's 512. What if I say that if I give you the entire full month to compound on 31st day, what is this amount that will come in? Please put down figures on it. It can be anything. कुछ नहीं तो कुछ ब्लफ कर दो यार, पर डालो. Just put it down on the comment box. Can you share the numbers if anybody, if you can? Okay, let me give you a bit more gist. If we can increase the 10 lakh, okay, we got answer is 10 lakh. Another answer we got is around 1 crore in 31 days. Okay, good. You can put down numbers. डालो यार, डाल में क्या है, डालते जाओ, right? Okay, can we just put next? So now I'll tell you another 10 days, how much it goes, so that you get more gist of it. So can we go further? Yeah. Now if you see from 11 day to 28 day, 10 day was so 5 lakh rupee, 21 day, thus 500 rupee, 28 day going went to 5 lakhs. So the person who has said 10 lakhs, sir, आपका तो 21st day पे हो जाता है. Again, give me answers, give me answers. I'm telling you, we ourselves are underestimating power of compounding. 10 crores is someone has said 10 crores. Amazing, very good. Numbers अच्छे लगते हैं. What? 100 crores. Someone has said 100 crores. Amazing, amazing, very good, super. Let's go further. Uh, can we go to next? Wow. So someone has said 100 crores, someone has said 10 crores. So if we can see, on from 21st day, 20th day was 5 lakh, 21st day was 10 lakh, 21st day to 30th day it went to 35 crores, 53 crores. And just in one day's time, another 53 crores. In 31st day, it is 10.107 crores. Can Again, that's what I'm telling you. We ourselves are underestimating power of compounding. Power of compounding does take some time, but at the fag end of that your investment journey, it will compound, which you can even think about. So remember this thing, have trust on compounding power, as in sky's limit for you. Yeah, next. Again, investment planning, so we spoke about inflation and everything, but invest planning is also very, very important. It's not only about inflation. Planning has many aspects to it, like, you need to understand what is your risk appetite, you need to understand what are your goals, tenures, timelines. There are many aspects to it. So again, investment planning has to be done. It is not that you invest and you forget it, and you will get amount, but you won't be able to enjoy your life, or your goals which you wanted, you won't be able to do it. Now, why planning is important? Again, everybody will agree with me, that we have limited salary or we have limited income, but the dreams are a lot, which is good. So planning is important, that which are the dreams which are important to be fulfilled with. So the next part, the next is next. Yeah, the next is holistic finance. So we are going to speak about holistic financial assessment. First and the foremost thing, what we're going to do. So as we spoke in the right at the start, that once you end your year, what you do is you close your account, and then you a bit think about it. What was the last year which has gone? If you are in a in an organization, before giving an increment, you feel that KR is right. KR is something which you come to know where you are standing, what you have done. Same goes, review your financial situations. Why? What you are reviewing? So I'll be reviewing my, what are my assets, what are my liabilities, how much net worth it is, whether I'm into debt, I'm into asset plus, category, or into debt. I'll give you a good gist of it. For example, say if I want to say go from say Mumbai, if I want to go from say Borivali to Churchgate in Mumbai through an Ola, okay, I know what my goals are. I want to reach Churchgate, but for that Ola or Uber to come to my destination, I need to put where I'm standing. So same goes on the personal finance. You need to know where you are standing. That will only you come to know when you review your financial situation till now, where you are standing. Then you can only think about the future growth, right? So examine that. Second is examine your cash flows. Now, again, as I just spoke, that many times it happens. लोग तो बोलते ही है भाई पैसा कम है, right? Yeah, that's the only thing that we always say. That is because we haven't saw our cash flows, that many times it happens that because of the Flipkarts and all, it that there are 5 to 10 expenses that you do, or the 5 to 10 purchases that you do, that you don't even know you are never going to utilize the thing. Now, for an example, if I want to buy a shirt from say Flipkart, I'll buy that shirt of 2,000 rupees. But as soon as I see 80% discount, 50% discount, I'll take that things which are not going to be used to me, but I'll take that and keep it in my, at one place in my house. Your cash flows are getting impacted. So understand what are your cash flows, where your investment is going, how much cash flow, how much, are you into debt, are you into surplus. It is very important to, again, if you are having too much of debt, okay, debt with you. I've seen many people say, who has a 1 lakh salary, for example, and they have taken a loan of what, 70%, 80% they have taken a loan. Remember one thing है, 70% ले तो लिया चलेगा, but जॉब चला जाएगा कौन देगा उतना, and forget about that. 70% आपने लोन ले ली, तो 30% में आपका क्या गुजारा होगा? अगर गुजारा भी हो जाएगा, इन्वेस्टमेंट क्या होगा? व्हाट अबाउट द अदर गोल्स? So understand your cash flows. If you have personal loan or credit card loan, wipe it off ASAP, because that has a highest interest to it. Then again, very big fact, very big thing, and this is the only thing जहाँ पे लोग पैसा नहीं कमाते, is understanding the risk factor. We always say in personal finance, right? That that emotions. We spoke of emotions. That if you are in control of your emotions, you should be able to cross your all your goals. But what emotion is all about? It's about the risk. Now, for an example, if I tell you there because of the recent market rally, there are small kids, not small kids, but a millennial. That's a new word, right? A millennial which comes to me and say, Rishit, I want to invest in equity, a very high risk equity. I want returns. I'm okay to take a risk. I'm okay to take a hit. Now, when you go for very high risk, obviously you might go into losses. But the problem is, if I invest that money, as soon as वो 1 लाख रुपया डाला, as soon as 1 lakh goes to say 90,000, he'll start buzzing me up. Rishit, 90,000 हो गया. Rishit, 80,000 हो गया. Problem is, people doesn't what is the risk appetite they are having, and that is the reason they are not able to make money out of it. So it is very important for you. This is a basic thing, with a very important thing, but to understand what is your risk appetite, consider risk appetite. If you doesn't know, then again, seek a qualified advisor. Because look, qualified advisor is someone who is who's a third party. So basically, he will give you suggestions which are going to be useful for you without any biases, because he doesn't have any emotions attached to you. Second important thing is, a qualified advisor will always help you. He is not a product seller, he's a solution seller. He will understand your risk appetite, he will understand all your goals, he will understand your timeline, and then he will say that these are the things that has to be done. And most important thing, he is not a yes to person. हाँ भाई आपने बोल दिया हम लोग कर लेते हैं, नहीं ये नहीं है तो नहीं है, then upon you. But he'll straight away say a no on your face, or this is not right for you. And that's what, as a human being, I feel we need it. एक थोड़ा डंडा चाहिए होता है ऊपर से, right? So if you understand it, do it by yourself. If you don't, it's okay to consult a qualified advisor. If you have any problem, health problems, you go to doctor, right? Same, qualified advisor is a field which is there to help you on your personal finances. These are the people who will make you rich. These are people who make your dreams achieve. So again, three important people. Till now we always spoke about two people. We always spoke about is, a doctor should be there, a lawyer should be there. Now it will be third person is there. A qualified advisor should also be there with you. Again, review of your insurance coverage. We already spoke about what is insurance coverage all about. What are the things which are, I'm not going too much into it. Plan your retirement. Now, a simple example. If I say earlier, so again, as per the study, I'm not saying that, as per the study, around 70 to 80% of the people are not going to be able, going to able to retire. Okay, the reason behind is, look, when I speak of retirement, you need to think about what is the inflation. Now, earlier we used to invest into FDs. Inflations were, the interest rates were high, so people were able to retire. But if you notice right now, not many people are able to retire because of the huge numbers that are coming in. Now, when I'm going to retire, say if I want to retire by 60, usually it happens that my kid will be having a higher education, or will be nearby marriage, or they will be doing a marriage. So if I have not planned it properly, my entire retirement kit will go into that, and ultimately you will never be able to retire. Second important thing which is coming up big time right now is, that because of medical enhancement, people are living way too long. सब लोग गोली लेके जिएंगे, लेकिन जिएंगे सही, पर गोली के लिए भी पैसा चाहिए होगा आपको. Right? So, and another thing, because of stress, people want to retire early. So now what is happening is, your earning life is reducing, your retirement life is increasing. So if you don't plan your retirement, now gone are the days whereby your retirement fund 1 or 2 crores will be okay. No, plan it out, and trust me, you are not going to get 1 2 crores in a day's time or 10 years time. It has to be planned. It has to be compounded with time. जितना time आप ज़्यादा दोगे, उतना it will be better for you. So again, as I said, that everybody has a number of goals, but always the salary is less or the income is less for us. So now it is important for you to to reduce down your goals, to filter out your dreams which cannot happen right now. Look, let's be practical. Not everything will be achieved at single point of time. It happens with slowly, and like goals nahi bhi honge, which is a fact of life. Not everybody can achieve that. Now how you're going to do it? So for example, I'll say that I want to buy a Mercedes E class. Okay, so be very specific what your goals are. For me, my goal is to buy a Mercedes E class. I'm very specific. Measurable, what is the amount that I'm going to, as in what is the cost of it? Probably 60 lakhs, 70 lakhs. So be clear, say for example 70 lakhs. Is it measurable? Yes. Achievable, whether I'll be able to achieve it? अगर मेरा 1 लाख का सैलरी मुझे 80 लाख का मैं क्या करूंगा? I never be able to achieve it. And this is where achievable is something your majority of dreams will get wiped off, right? So achievable, make sure that you think whether I'll be able to do it or not. Okay, then comes is relevant. All my friends are are in say a middle class car like Maruti, and I'm using a Mercedes car. What's the use of it? Is it relevant to me? I don't think so. Or a simple example, nowadays millionaires want iPhones. Now if you ask me, iPhone costs around 1.5, 1.6 lakh rupee. A simple phone of 30,000, 40,000 will also give you the same features of iPhone. See how much relevant it is. Again, filter it out, and then is time bound. Now, all your goals which are there, if all the goals come out of this filtration, whichever the goals are there, they are the main goals that has to be achieved right now. And then you need to plan out with your cash flows how you can do it with your timelines. Other all goals has to be kept aside till the major goals are not getting achieved. So this is something which is important for any of your goals to be filtered out. So this is a filtration process. Next. Right. So we spoke about about the investment insurance. Again, we need to speak about tax planning, about the taxation, because that is something which is very important. Being a middle class guy, हम लोग तो दबते ही जाते हैं, दोनों साइड टैक्स आते ही जाता है, तो उसके ऊपर थोड़ा ध्यान रखना है, right? So yeah, let's move ahead. So why tax? Again, there's a question. How do you how often do you review your financial plan? If you can put down the poll, as in if you can click on the poll, it will be great to for us to understand. Perfectly. So we got the answers. 11% said monthly, quarterly 33%, and annually 55% is what the poll has come up with. So again, monthly, if you ask me, I don't think in months' time anything will change unless and it's a very, very critical scenarios. Okay, that's a different thing. I guess 11% are coming to that category. Others monthly, I guess, is not required. Quarterly, again, if it's a too big portfolio, obviously it will be required. But a small portfolio or mid-term portfolio, I think if you know to do it, it's okay. Semi-annually or annually has to be done once in a year. At least has to be done. Reason behind, for example, if I have a goal, all my goals are say 10 years away. There'll be instances where my goals will change. There'll be some goals which will come after say in 2 years time. So what will happen is, till now so for example, if I invested for a high risk portfolio, now in 2 years time I need to get that my goals done, for some goal. So my risk profile will change, my allocations, my portfolios will change accordingly. So at least once in a year, review is very, very important, or once in 6 months is very, very important, just because your goals are going to change, not because the markets are not performing or product is not performing. Okay. Next. Perfect. So if we start text planning at the start of new year, as we can see, it creates peace of mind. You get compounding effect. SIP ke through kar sakte ho. You get discipline saving. What is SIP? It's all about discipline, right? Personal finance all about discipline. Same goes for your tax. It will help you to have a disciplined manner. At the same time, your cash flows will be much more better. Just imagine one thing. If I say that you invest everything 2 lakh rupee at one go, or if you invest say 20,000 rupees every month, 20,000 will look much more better, right? 2 lakhs will be, it will hit you a bit psychologically, right? So start planning from the start of the year, not at the end. That's a problem that many of us do it. Next. Again, what are the things that you should take care of, so think of, sit with a financial advisor or sit with a CEO, do your own tax planning, update your tax planning, give that declaration to your to your HR, so that you know where how much allocation that you to give on your personal finance or the cash flow side. Choose again, that everybody will be knowing there are two regions, one is old regime and one is new regime. So choose which is best for you. If you're not able to understand, consult a CA, consult a financial advisor, and get it done. Now again, when we speak about ATC, I'm just giving a very rough gist. I'm not a CA, but just a very rough gist. Okay. So when I speak about ATC, there are two kind of expenses. There are two kind of investment. One is an expense related investment, which is, if you buy property, your principal gets included into ATC, principal amount. So if you have any expense related, investments, then do that first, and then you think about investment. So go for expense, and then you think about this. Again, consider ATC, ATD, ATCD. The basics has to be clear. It has to be fulfilled. It has to be invested. If not, okay. Further, again, estimating your no, so again, this is mistake that we do, that we usually forget. That the additional income that we have, we forget about the taxation part on it. So if you have any additional incomes, do think about it, and do think what are the taxation that will come in the future. Pay your advance taxes and file your return. Now this is very important. If you are, say, if you want to purchase a loan or something, filing regular returns is important. Plus, when we book losses into equity, if you want to carry forward, filing returns every year is important. Otherwise, you lose out on the opportunities. Next. Now again, this is something which I guess everybody will agree. 90%, not 90, I'll say 80% of the people will say that, I start my tax planning investments from, say, December to March. That's when HR starts pulling you off. Then you to send the declaration, otherwise we'll cut the salary and all. So at that point of time, we'll start investing. And how we invested in a havoc manner. तूने कहाँ पे डाला, मैं भी डाल देता हूँ, चल अभी time नहीं है, right? So don't do that. Start it from the day one itself. Again, friends, relative as agents or bank RMs. Wow. Now, when I say friends, relative, now tell me one thing. Say if you have a traditional policy of anything, any investment, friend relative will come to you, take a check, will explain you about the product, कि क्या benefit है. But did they ever ask you what is your risk appetite, what are your goals, what are your cash flows? Did they ever ask you? If they really asked you, they are good advisors. But if they have not asked you, they are going to earn money after it. You are not, as in you will earn, but they are gaining after it. Remember one thing, that in future, for achieving your goals, it's you who is going to be liable, not your friends or not your relatives who are going to be liable. So when you invest with a qualified advisor, not as an agent. And agent will try to sell a product, not the solution to you. So make sure that you invest or do anything with a qualified advisor if you are doing it. Do on Salesforce RM, your bank RM. Now, think again from a logic point of view. If I'm in a company, I'll try to sell the things which are being told to my boss, or which are in my sales target. So whether it's going to be good for you, they are less interested. What they want is, they want to achieve their sales target. They want to, right? They want to achieve their sales target. Probably this employee might go to another branch, or this employee might switch to another. They are not a permanent thing. So when you invest with a long term point of view, not a short term point of view. Don't go for flavor of the season. Like last 3 months, there was a lot of talks about NPS. NPS is good. You have to invest, but think about the pros and cons of all the things, and you invest. I'm not against any product. I'm just saying it. Okay. And herd mentality. Don't think that my friend has invested, I'll also invested. Understand, your goals are different. Your friends' goals are different. Both of your cash flows are different. Both of your risk appetites are different. Both of your personality is different. Yeah, how can you follow a herd mentality, right? So be to yourself, be true to the label at all the times. And yeah, that's all. I guess that's all from my side. I guess you guys, I hope that I've given some insights out of it, and we will be able to you will be able to do your personal finances better, is what I really hope for, and all the best for the future.
Thank you, Rishit. This has been very insightful. Actually, I got a lot of reality check.
Thank
I'm
you
going
so
to go
much.
back and go to realign my personal finances first. Okay, before we go ahead and take questions, we have a poll again for y'all. So, what is your top financial goal for this year? Saving for retirement, buying a home or car, paying off your debt, or creating that emergency fund? So, please go out there and reply us. What is your top financial goal for this year? Can I ask you this question? Like, what's your top for this year?
So, at any point of my saving for retirement will be the first one that I'll
Oh,
do.
absolutely,
Because
absolutely.
that is a retirement fund, I'll need is more than 10 crore rupees. I need to start it right
Oh
now,
my
then I'll be able to
God.
achieve 10 crores.
Absolutely, absolutely. Retirement, saving, and like you said, right, we are earning for less years now, and we
Right.
are a lot of more time when we want to spend with the retirement. And you talked about lifestyle, right? With that, the current lifestyle that we have today, having that during retirement is the most important thing, and it's going to be really difficult to crack that with the inflation that we are
I
working
agree.
with. Okay, do we have the answers to this poll? What is your top financial goal for this year? All right, 36% is saying for
Wow, that's
saving for
amazing.
retirement. 36% says they are paying off their debts. Absolutely important. This should be your first
I
top
agree.
priority when it comes to having debts, liabilities. You definitely need to go and first take care of that. Creating an emergency fund, 18% people are saying, thank you, that's an important step everyone should take. And then 9% are saying they want to buy a home or a car. Absolutely. You should go and spoil yourself a little bit for once and all. All right. Let's go ahead, take questions from our viewers. We have received a lot of questions, Rishit, so definitely a successful masterclass, I can say already.
Thank you so much.
All right. Let's take the first question. Mr. Ravi Lalpani says, in life insurance, is term plan better or an investment plan, which includes insurance plus guaranteed returns and two times death cover? All right. Though this answer have to be done by a qualified financial advisor who takes care and sees your unique situation, but still, would you like to give an overall answer to
So
this?
I'll give it. So when we speak two times debt curve, for example, you have started investing 1 lakh rupee or 10 lakh rupee, for example.
Yeah.
Two time debt curve is what, 20 lakhs is what I assume.
Sure.
Question to yourself: within 20 lakh rupees, will your family sustain?
Mm.
I guess answer will be no. The question ends there. It should never be. Don't. As I said, I'm a Gujarati. खिचड़ी बहुत पसंद है पर असली में लेने का नहीं खिचड़ी. We as in be different, as in be true to the label. Insurance is insurance, investment is investment.
All right. The next question is from Mr. Anish. What's the simplest way to start saving for retirement?
Simple answer is start an SIP.
Perfect. All right. All
As
right.
in whether it may be into index fund, depending on your risk profile, start an SIP so that small amount of investment you are doing every month, and then that will compound, which we saw the compounding effect. That will compound to a very big amount in the future.
Okay, Mr. Satyanarayan. I'm sorry if I didn't pronounce that name right. Okay, is it better to have a family floater or an individual policy for a family?
Sure. So, for example, if a person is having some pre-existing disease like diabetes or hypertension or something, I would rather say have a individual policy for him, because probabilities he might need to use frequently compared to you doing it by yourself. So, what will if you take a floater policy, you will also be hit because of the claims that he is doing it on the premium side. So if there is a person who is having pre-existing,
Yeah.
individuals is important, but yeah, if you are both are fit and fine, floater is okay.
Okay. Do again, please check with your qualified financial advisor who will assess your unique situation and give you the right advice, please. Okay. Mr. Neeraj is asking, should I pay off debt or save money first?
So that if I say there is no right answer,
Right.
but as per the logic, your debt should not be more than 30% of your salary, of your salary. Now, say if your debt is say 80%, 20% में क्या करोगे यार? इन्वेस्ट तो आपको पहले डेट कम करना पड़ेगा.
Yeah.
But speak as she rightly said, it is a very customizable topic. It depends on what are your risk appetite, what are your goals, and based upon that, I can give you a clear answer. But yeah, as per the law, that should be less than 30% of your salary, or maximum to 30% of your salary.
Okay, Nikita is asking for a trick from you. What's the one thing I should do this year to improve my finances?
Sit with a financial advisor.
Perfect. That's a perfect answer, Rachel. All right. Ashish was asking, am I on track with my retirement savings or should I be adjusting my contributions? What is the right call I should take? Should I use some tools to get through this? Though the answer again is you should go to a financial advisor.
So I'll
But
say
yes.
this,
Yes.
tools and everything is okay.
Yeah.
Personal finance, why people don't earn in personal finance is because of the emotions. If you're in control of emotions, go ahead and do all that online by yourself. But if you feel there's some emotions coming in between, a qualified advisor will help you. थोड़ा डंडा मारेगा तो आपको हो जाएगा.
That is so true. All right. Dhwani is asking, I've kept my emergency fund in savings account. Is this the right way?
Yeah, that would do. As in, make sure that the purpose is to get money immediately in a day or two. Saving is okay, but make sure that it should be a good bank, a big bank, and not a small bank, because in case if that goes away, then just imagine what can happen.
Absolutely. All right. Akash is asking, gift fund is such an interesting idea. Can I have an airplane fund? I travel a lot. Is this even logical?
That's coming to vacation, right? I mean,
Yes, yes, absolutely. Okay. Kiyash is asking, how much is the amount one should have at home? So I think you covered a little part of this कि घर के अंदर कितना पैसा रखना चाहिए.
okay.
पहले के जमाने में लोग भर भर के रखते
Acha,
थे.
so cash in hand is what
Yes,
we're trying to. So
yes.
cash. So if you ask me, ideally, say cash in hand should be there's again a very broad based thing. But if I say if I'm buying 1 or 2 lakh rupees, that would be okay because everybody has a GPay right now, at least in India. Second thing, in case if fund is required, big fund is required for a DOT, you can always ask from a friend to get it, and then you can give it to him. Sure. So it's okay to invest in a mutual fund, which will take a T+1 day to get the money back, but cash in and you are not getting anything out of it. Just try to earn a 1 or 2% of interest of it.
Absolutely. I need to go back to that point where you told that you should name the three people who will be there for you
True.
if something happens to you. I can say I got a shock. I just have two names. I don't have three names. It was actually scary for me, though obviously thanks to One Finance and being a part as an employee of One Finance, I have done my financial advisory a year with the best of experts. So I'm lucky that I have been guided that way. So it's very important that everyone is guided in the right track when it comes to their personal finances. You never know what's going to happen, and you should be definitely ready for it. You should take it in the positive, negative, both sides, absolutely for the same. All right, Mr. Rohit is asking, take combined policy for parents and family or separate for both?
Keep parents as different because probabilities they will be claiming it more compared to you because you are younger. So keep it different for them, for you different, so that on the premium impactability you don't get it.
All right. Mr. Pradeep Singh is asking, personal health insurance or group family health insurance? You're going round and
So
round
we
here.
say the same thing,
Yes.
as in
All right. Ujjwala is asking, three qualities in a financial advisor to work with.
three qualities. If I say, he should be knowledgeable.
Yeah.
He should be experienced enough. Okay, and the third part is he should be saying a no to you. He should not be a yes guy.
Okay. All right. We have Denzel. He's asking, is it better to have many mutual funds for every type of goal or club few goals to have fewer mutual funds?
Look, when we speak about mutual fund, you should not have many mutual fund, but because ultimately it will overlap your portfolio. So होगा क्या एक गया तो नीचे ही गिरेगा. The purpose of mutual fund is to diversify your portfolio, not to overlap it. So lesser the better. But yeah, as in you can obviously club it to as in 2 3 goals for a single mutual fund. That's okay. But there should not be many funds for sure.
Okay. Okay, let's just take this last question,
Sure.
Rishit, please. Okay, so I have this. Rajesh is asking, how often should I review my insurance policies and what key factors should I consider during this review?
So insurance policy has to be reviewed before your renewal, so that and the factors that you see that any new thing which is coming in the market. For example, earlier, as I said, there were only 1 or 2% room capping which are coming in. Now the new policies are coming with a single private room rent, no room rent. Now there are many policies which are giving you benefits of you get as even free health checkups and all. So make sure that you as in you be I'll say as up to the mark. See what are the things which are happening in the new product side, and if it suits you, then go for it.
Okay, because Pradeep is asking this, I really want to take this. Any suggestions in NPS, please?
So NPS, there are two things is what I feel. When you invest into NPS, you are stuck for 60 years. Yeah, you can withdraw certain amount of money, but you get also get a tax benefit. Now there are two thought process to it. One is the thought process. NPS might give me say 10 to 15% of return, but if I invest the same amount of money in a very high risk fund, I probably might get more returns with a no lock into it. So it purely depends what is the thought process that you are having, whether you want to go for tax saving or whether you want to go for growth. You're okay to pay taxes. It depends on person to person.
Perfect. All right. So I hope I'll just check with my team. Is there any questions we need to take, or we can close here? Okay, we want to take one more question according to our team. Okay, let's just take this. All right. The question is from Mr. Pradeep Singh. He says, "Ma'am, please share your suggestion on voluntary provident fund, please."
So, so it purely depends on your risk appetite. For example, if I have a high risk appetite, I'll never go for provident fund. I'll always go for high risk mutual fund. So it purely depends on what is the risk appetite that you are. But yeah, you should diversify your investment. How much diversification that you do judge, or your financial advisor can judge it.
All right, that was the last question. Please go ahead and send these questions. We'll try to get it answered from Mr. Rishit Sylvia later after this. And if not, we have advisors at our end which will be happy to help whenever you want. Just you have to get connected to One Finance. We talked a lot about savings, retirement, mutual fund overlap. There are a lot of calculators and scoring and ranking tools on One Finance website. You can always go and check out those tools. Can help you to make informed decisions. And definitely, you should definitely go to a qualified financial advisor when you talk anything about your personal finances or take any particular reasons you have to go to a financial advisor, you should definitely go to one. All right, Rishit, thank you so
Thank you
much.
so
This was
much.
a very interesting, insightful
Thank you
session.
so
A
much.
lot to learn. We'll keep coming back to master classes again for y'all. Stay connected with us at One Finance, and thank you so much for watching today.